What is an installment sale? Let's talk about it in this session. At the end of our discussion, you will be equipped to calculate gains smartly using Form 6252 in an installment sale. And you're also going to be able to grasp the advantages of advising seller on the perks of an installment sale treatment. Let's move on. So, what is an installment sale exactly? This is straight from the IRS website. Generally, an installment sale is a disposition of property where at least one payment is received after the end of the tax year in which the disposition occurs. Now picture this. You sell an asset, make some gains, but instead of getting a lump sum, you receive payments over several tax years. That is the perfect setup for what we call an installment sale. Here's the deal. You, as the taxpayer, get to decide whether to report entire gain in the sale year or spread it out using the installment method. Installment sales are useful for lowering capital gain taxes where the income can be delayed until they are taxed at a lower rate. However, there are two requirements for an installment sale. The initial requirement is that if an asset is sold with payments scheduled over time, there must be a receipt of at least one payment in the year following the tax year of the sale. The second condition is that the details on the installment sale are documented on Form 6252 that you're going to submit it to the IRS in the year of the sale. The installment sale method is not applicable in cases where the property or asset is sold at a loss or when dealers are involved in the sale of personal or real property. Let's consider an example with Alice and Bob. Alice agrees to sell her house to Bob for $300,000. But instead of Bob paying the full amount upfront, they agree to a structured payment plan. Bob makes an initial down payment of $50,000 and commits to making annual payments of $25,000 over the next several years. In this installment sale, Alice retains a security interest in the property, while Bob completes all the payments. Each payment includes a portion of the principal amount and possibly some interest. This is an installment sale where there is at least one payment made after the year of the sale. In contrast, so imagine Alice decides to sell her house to Bob for $300,000. In this regular sale, so Bob pays the entire purchase price up front and Alice transfers ownership of the property to him immediately. So this is a very straightforward transaction where the full payment is made. The ownership changes hand in a single transaction. So you can see the contrast between a regular sale and an installment sale, right? Okay, so now we know what an installment sale is. We know that we need to report it using the installment sale method to the IRS. So we're going to use Form 6252, also known as the installment sale income, to do the reporting. So on this form, it helps calculate the gross profit percentage not just for the year you sell the property, but also for the years that follow. But there's something you need to remember. So if there's any recapture amount like depreciation recapture, you need to let everyone know in the year of the sale. So you report it on the year of the sale on the Form 6252. So this keeps things clear and follows the IRS rules. So now, using installment sales, which is a pretty common trend in real estate, and it is trending now more than ever because the interest rate is getting higher. And it's harder for a buyer to afford the property because the interest rate is high, so higher expenses, right? Or higher mortgage payment. And it's harder to sell, right? Because, there's less demand. So this is becoming more and more common. Here's two things that you need to be concerned about. First is that dealer cannot use the installment sale method. So even if they have an agreement for an installment sale, they cannot use the installment sale method for the tax, right? They have to report on the gain even though they have a contract with the buyer. And the second thing is, if you don't charge enough interest, the IRS might charge you interest. So we're gonna touch on that a bit later. So I just want to let you know upfront in this overview. In real estate deals, using the installment sale method is super useful, especially when the property doesn't have an existing mortgage and the seller is okay with helping the buyer to providing financing. So this way, the seller is getting steady income over time. And the good part is that you, as a seller, get to spread out your tax payments over the year instead of having to get a big tax hit right after the sale. And guess what? It not just for housing. It works well when selling business stuff or even the entire businesses. But that is beyond the scope of this course. We only focus on real estate on this course. But if you're interested in using this installment sale method, let me know in the Q&A section and we can explore more opportunities. With that, so we're gonna go more deeper into installment sales in real estate in the next video. So digging more into how it works and why it's handy, and then we're gonna go all the way to fill out the form 6252. You excited? Let's go.